Good morning, options traders. Steve Ganz here, and I'm going to look at opening a new trade here in Honeywell. So this is going to be part of the start to finish series, and it's going to be a trade that I am going to put some management concepts around. I won't, just for clarification, I won't be necessarily monitoring this hour by hour and provide a close, but I will talk about how I plan on managing this trade. And again, all trades should be paper trades, excuse me, while you're learning. So what's my premise on this trade? My premise here is that Honeywell, for a long time, for months and months and months, has traded in a general range. That general range floats between around the 207.50 to 208 range, down here to maybe the 195 range. And right now, we're right about in the center of that range, and our market has been very bullish overall. So our market's been very bullish overall, but yet Honeywell doesn't seem to be rallying much. And in fact, we've had a lot of red days, and the volume is starting to pick up. These are what I would call more bearish signals for this stock. It's not rallying when the market's rallying, and it's starting to get higher volume as it's moving down a little bit. So based on that, I have an interest in a bearish type of trade. So let's show you how I would use Option Strat to come in and maybe figure out a good trade for this particular underline. So I put in Honeywell. Now I'm not going to be very bearish on this. I'm just going to be bearish on it. And if I'm bearish on it, and we can see that it pops up a number of different possibilities for us. And maybe I have a target price on this. It's currently at 203. If I were to put a target price, I would think, maybe around the 200 mark, something like that. If I wanted to put that in there, I don't need to put that in there, but let me just put that in there and just see how that changes the configuration of the trades. So I can take a look at this and I can see now if that is my premise, that I think it might go down to 200 or so. And I want, in this case, I'm looking maybe for a little bit shorter dated trade. Right now, this is going out November 15th. Maybe I don't want to be quite that far out. Maybe I just want to do something that's dated more around November 4th here, so giving this a couple of weeks essentially. So under these scenarios, this is what I could look at. I could look at purchasing a long put, and that gives me a potential profit range here. Gives me an amount of risk, a percent chance of that being a profitable trade. When I look at all of these different potential variations, well, the short call requires a massive amount of collateral because that is basically unlimited upside risk. I don't want that, particularly if I'm a newer trader, which I'm not, but those that are should always do defined risk trades. A defined risk trade is something where maybe you're selling one strike and buying a different strike. In this case, in the bear call spread, selling a 200 call, buying a 210 call. This gives me a chance of $440 in profit for a risk of $560. I kind of like that. I think that's a pretty good possibility here. Same thing with this one, though. I look at the bear put spread. In this case, basically, I'm buying a put spread. That gives me a little bit higher percent chance of return, lesser profits, a little bit a little bit lower risk, slightly lower chance of profit. So I can look at either of these two and kind of decide what might fit, my thought process a little bit more. And I would probably, let's just take a look at this one if I open it up in the builder. So looking at this one, if I went and put on this trade, again, in this case, I'm going to be buying the 205, selling the 200. So this will have a little bit of theta decay with it. Not much, but a little bit of theta decay. I'm actually going to go ahead and take this particular approach on this trade. What I am going to look for, though, is in the next few days, if this trade does not start going in my favor by, say, this Thursday or Friday, if we're still in this general range, maybe even a little bit higher, maybe up here to 206, I will look at pulling the plug on this trade, making the assessment that my assumption maybe was not a correct assumption. In other words, based on looking at this chart, my thinking is that Honeywell should maybe start to fall a little bit fairly soon. If it does not, then my assumption was wrong and I just need to be back out of that trade. So what I'm going to do here is I've got this trade right here. I'm going to go ahead, save the trade. I will share the link in the notes down below so that anyone can come in and take a look at this. And I have a bearish thesis over this week. And let me just put the date on there that we're 9/23 open. And we'll go ahead and save this trade. I'll copy that link, share it out with everyone. And again, I am not going to update. Let me rephrase that. I may or may not update on this going forward. But my game plan is that if the market stays in this general range between, say, 204 and 206, and I'm in that general range by the end of the week, I'm going to pull the plug for a small loss on this. If this starts moving down in my favor and we get down here into this 200 range, I'll just kind of let it run there at that point. I may also very well at some point, if we get a larger move down, it's not inconceivable that I would sell a put spread against this as well. Let's just say, for example, that this sold off down here to maybe the 197 range or so. As we're starting to approach the bottom of what I deem this channel to be, of the 190 to 195 range, I get down in this range, I would have two possibilities that I could do there. If I get down into this 195 or so, I could go ahead and just take my profit and run, or I could sell a put spread against that, juicing this trade. And I could sell that put spread possibly in a much tighter range so that even if the market tanked from there, I would have zero risk of actual loss on the trade. So those are the couple things I'm going to look for on this going forward. And again, I may or may not actually come back in and do an update, but I'm telling you right now what my management game plan is so that you can see how that might play out once you copy this trade and put it into your own option strat. So that's it for today, everyone. Take care.